Let's move from these big global forces to specific geographies, because what stands out is just how much policy choices are driving these diverging paths, especially on inflation.
And we have to start with the U.S. Their policies are really shaping the global environment. The growth outlook there remains pretty subdued. 52% anticipate weak or very weak growth. But the defining feature is the inflation risk. 59% expect high inflation in the U.S. over the next year. That's a higher proportion than for any other region.
Okay, so this is where we need to connect the dots. The U.S. saw a rate cut in September, which suggests monetary loosening, but its inflation expectations are the highest. So if the weak dollar is already raising import costs, what is fiscal policy doing?
Well, fiscal policy is expected to become significantly more expansionary. The report points to a new fiscal package that's projected to add more than $3 trillion to the U.S. deficit over the next decade.
$3 trillion.
Yeah, so when you combine that kind of massive fiscal stimulus with tariffs and a weakening currency, you basically create this powerful domestic inflation engine.
Which makes the contrast with Europe really sharp. Europe's outlook is improving, right? 60% expect moderate or strong growth, and crucially, their inflation pressures are subdued. 44% expect low inflation.
And their policy aligns with that. 74% expect expansionary fiscal budgets. We see things like Germany's historic spending program, which is designed to stimulate growth without that immediate inflation headwind the U.S. is facing.
And then you have China, which is facing the complete opposite problem. They have strong growth expectations. 71% expect moderate or strong growth, but they have persistent deflationary risks. A staggering 93% expect low or very low inflation.
China's kind of trapped in a low-demand environment. 3/4 of economists expect both fiscal and monetary policy to loosen even further just to fight this. It's a really unique challenge.
And amidst all this effort to boost consumption, you shared an interesting detail about how Chinese households are reacting.
Right, they're reacting by saving, but in a non-traditional way. The housing market is slumping, there's economic uncertainty, so households are pouring record amounts of savings into the stock market.
Into assets, not spending.
Exactly, and that's why that stimulus isn't flowing into the economy as efficiently as hoped, and why they'll probably keep loosening policy.
Okay, shifting to the growth winners. The Middle East and North Africa, MENA, has the strongest outlook, with 37% expecting strong or very strong growth.